Welcome back. You're watching Markets at Noon. Well, let's get in Abneesh Roy, the Executive Director with Nuvama Institutional Equities, to discuss the consumption space in detail. Abneesh, to start off with, both Kalyan and Titan have come out with their Q2 updates. The numbers seem to be strong, but they seem to have been boosted by this one-time sales because of the cut in the custom duty, and market is not taking that quite positively. How are you reading into this Q2 numbers, and do you expect the margins to be on the weaker side given the fact that the studded sales were quite weaker for both the companies?
Yes, the stocks have corrected because generally how markets behave is sell-on news happens. Now the updates are out, so no more positive surprise in terms of sales is there. But yes, you are right. On the margins front, there will be pressure because studded has grown much slower than the gold, and that always happens when gold has seen so much of inflation in terms of pricing, and diamond on the other hand has seen disruption from lab-grown diamond. Second, of course, is post the duty cut by the government. We have seen that first 45 days after that, there was a huge pent-up demand which came back. The issue is now the gold price is back and in fact above where it was before the rate cut had happened. So if before the duty cut the volumes were slow, the footfalls were slow, I think now we are back to normal. But yes, going ahead in H2, the number of marriage days is very strong. So that should help. In terms of consumption, what we are picking up, there are pockets of urban consumption which are still doing well. But generally, urban consumption is lagging rural consumption. If you see the 5-6 updates which have come, what we have seen both in the FMCG and the retail, the rural focused companies, rural based companies or value part of the consumption, those have grown faster. Urban consumption, there is slight issue of food inflation, telecom hikes, etc. impacting. But rural, definitely because of the freebies and because for rural anyway, food inflation, not much of a concern, it's localized. We are seeing rural growth being faster for most of the companies. Yes.
Rural growth is faster for most of the companies, at least that's a silver lining. But Abneesh, shifting focus to the paints industry now, because of course, on one hand, there is that entire volatility of crude that happened, and on the other side, there looks like there could be some consolidation on the cards with this latest commentary coming in from the AkzoNobel parent. Whom do you see is the likely suitor back home? Do you think Grasim could be the one who might be looking out to add more capacity?
So this is exactly in line with our expectation. We were expecting consolidation in paint sector maybe after 1 or 2 years, but we are seeing it much earlier. So firstly, on the near term, in Q2, we expect weak numbers for Asian, Berger, etc. Because of very high rains, there is a postponement of the exterior paints. Because if the wall is damp because of so much extra rains, it is not possible to do exterior paints. Second is there is a level of downtrading still being there, and in the base still price cut is there. So Q2 results will be weak. So that's why we had pointed out in the preview last week itself. Now coming to the specific question on Akzo, I think clearly in paints we expect Asian and Berger will continue to dominate even 5 years, 10 years, 15 years down the line. But for rest of the players, I think it will be more of consolidation. Now, who will be the suitor? That time will tell, because Akzo has clearly said that everything is open, right? It is not that necessarily they selling out or they partially exiting is the only option. They have also said that partnership and all those things are also there. JV, everything is open. But I would say that Akzo is a small player. It is the fourth largest player. But if I see market share wise, it is in the mid-single digit. So at a mid-single digit market share in consumption or paints, the ability to influence the market or gain market share is very tough. So that's why we see that consolidation will be the game. And will it be JSW Paints? Will it be Birla Opus? Will it be any other player? That I think time will tell. It could be anyone because it's a good brand. Dulux is a great brand. It has decades of presence, the distribution access, the brand, and very good presence in the premium and mid. I think it will be an attractive opportunity for anyone to collaborate either through a merger, either through a JV, or through partnership also. Yes.
Sticking to the paint sector, what are your channel checks suggesting? Has the competitive intensity now gone down significantly in this sector? And given the fact that crude prices have also come off from their peaks, not that they have not that they are at their lowest point currently, but still they are off than what they were at the Q1 level. So, can we see some margin benefits to start coming in at least for the second half of the financial year?
Yes, answering your last question, yes, we do see better margins for the sector in H2. Coming to competitive intensity, it is not at all a surprise. I think all the new players are also having a very, very rational strategy. No one is playing big disruption. Now, free tinting machine, extra grammage, more distributor margin. Those are things which every new player does. I don't think that disrupts the market, because in paints, the two big things are access to the paint shops, and second is, of course, the brand. Now, these things take decades to build in. It can't be built in 5-6 months. So, Birla Opus, JSW are all focusing on a gradual strategy, and we are not seeing any big impact of any of the new players who have come. And the latest initiative of AkzoNobel, I think that further shows that yes, consolidation will happen, and ultimately, in our view, Asian and Berger will continue to dominate even 5 years down the line. In rest of the players, I think they will have to work out what is the right strategy. But Birla Opus has built up huge capacity. So what do they get by buying AkzoNobel? Because they don't need the manufacturing. But in terms of brand and distribution, I think AkzoNobel can be a great fit for any of the new players. Yes.
So, any of the new players can also look at perhaps this opportunity. But Abneesh, what do you make of this war which is underway when it comes to quick commerce? And the impact clearly was seen in DMart numbers as well. Last week, the provisional update that we saw. What's your expectation? Will rest of the players feel the brunt too?
So yes, quick commerce, e-commerce, clearly disruption continues, and we are seeing now Zepto is also well funded, and Swiggy is planning the IPO. So all the e-commerce, quick commerce players are well funded. The good part is they are also looking at a rational strategy, not too many freebies, charging now for the delivery in many cases. So it's a path towards more of convenience rather than just a disruptive pricing. That's the first point. It is positive for FMCG companies, because for them, clearly, the reliance on the Kirana shops goes down further. That's why if you see Dabur, we did see an inventory correction because a lot of pipeline had built up in the Kirana. But if you see in Q2, we do see many FMCG companies will report a decent volume growth of 5 to 6% also. So Dabur's results should not be seen as the parameter.
Okay, so 5 to 6% volume growth. But before we let you go, quickly wanted to squeeze in one more question, Abneesh, and that's on Swiggy IPO. Any initial thoughts?
No, I don't cover that space, but clearly we do see that 2 to 3 players will survive, and it's good for the consumer companies that clearly the last mile will become much better. But in terms of pricing and all that, I think we will wait for the details, but I will not be able to comment on that.
Thank you, Abneesh, for joining us and for giving us all those details and for putting things into perspective. Let's shift focus, and in an exclusive conversation, my colleague